The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
I'm still Larry. I've got my John Logan Halloween mask on right now. Actually, Larry is out, and we hope he feels better. His voice is still on the south side of being perfect, and we're going to do some of the shtick that I do every morning in place of it, and I hope you guys enjoy it. We've got a big gap down. We were talking about some really cool market opportunities earlier. The Floby haircuts at Walmart, Uncle Charlie at My Three Sons, things like that. Really important things on a morning like this. Let's see here. Get my chart back. Just kidding, guys. We're going to get right into some information here on the indices and some currencies. I didn't even talk about the currencies other than the dollar earlier on the hour that I did from 8 to 9. We talked a lot about some of the index situations, the Shanghai and notes, bonds, gold, the usual suspects, a couple of stocks. But what we're going to do right now is just to switch gears from what we were talking about on the first hour. So I'm going to go into our currency server. Did I forget the Looking Good Lewis thing? Daggone it. That was my only opportunity to do that. So what I'm going to do is, and if you'll notice, these currencies, I mean, I don't have to tell you this, they trade like a banshee. And when you put a lot of these on one machine and then do a lot of funky things with them, with indicators and things of that nature. Let's see. Please, God, be okay. Here we go. All right, so we're going to take a look at the euro. The euro's rallied back up into that 109. Let me wait for my charts to come up here. My goodness. Let me check something really quick, guys. Why is this not acting better? I tell you what, we're going to come back to our currencies. Well, let me just look at our weekly here on the euro. There's something wrong with the indicators on this particular machine. As we look at this 109 is kind of the Maginot line for me for the euro, and I'm looking at opportunities to sell that. Now, we came down this past week, and I cannot get my daily chart up. I need that. So we're going to come back to that. I'll tell my tech guys about this. We're going to go talk about something else too and get our currency grid straight on the break. All right. So we talked a little bit about the S&Ps. We talked about a little bit of an overblown situation on the downside now, and we talked about this 1953, 54 getting back above this inflection point and looking at this as a possibility of getting long some futures here and being able to buy some opportunities of stocks that are showing themselves. I'm not a big fan of selling gap downs like this. We've obviously rallied 15 points or so from the bottom this morning, but I'm going to pay some serious attention to what's going on in my short-term breadth calculation here on my 60. I'm also going to be looking at, as we look before, here's our S&P situation. So on our grid on the scanner, we've got this. I hope you guys are still seeing this. We've got our green shoots for the first time above our 60 here. And I'm going to go into the level of the marketplace situation. This is the level of the marketplace. This is our low. And we, on our first hour, we were within here. Now we're starting to get some green shoots. That's evidenced by this green cell over here. This bottom one means that we're still in the vicinity on the south side of that inflection point at 53, I believe. Well, there it is, 1953, mouse over. But this will start to show gray when that's the case. Now, remember, over here, let's see. Let me see something. Yeah, we had seen that number. I think it was arrow down 37 before, and now we've broken stride. We closed above on the 60s on above the profiles, and Peak D was saying he's been looking at, just for instance, looking at situations to sell, and we've been, as our breadth has been negative, we've been looking at these long-term inflection points to sell. But again, we talked a lot about the relativity of the Shanghai versus what's going on in the U.S. stock market, some of the currency situations, some of the note situations, some of the gold situations. And I'm not exactly convinced that the market's going to hell in a handbasket right now. And I'm actually looking for a little bit of a bounce here. And this will be a trading bounce. This is a great time to be a trader. I've got my kind of hands up on both sides of my head here in the quotation marks. If you're not able to see me, which not being able to see me is not a bad thing. Trust me, guys. It's got to state that. But as we look at this, and I'm going to go to the Shanghai really quick. And we talked about this cash index situation earlier. We talked about it relative to pump and dump penny stocks. I mean, we talked about, again, if you guys are joining us late, if you guys have been here all morning, I'll hate to bore you to death. I'll make this as quick as possible. These run-ups like this usually end terribly, all right? And that's the same kind of analogy with these pump and dump stocks. A lot of people get excited. The emails go out. I'll tell you a story. I knew a guy in Florida that got involved with he hired a guy from DirecTV used to leave you these phone calls on your answer machine, or I don't know, this was kind of years ago, but get DirecTV, a big sales call on your answer machine, and then they keep calling automatically with a voice recorder. Well, he developed with this guy, he developed something with a DirecTV phone expert that was doing these dialers. They concocted this scheme that they got into a massive, deep amount of trouble with, and some of these guys went offshore and never came back because the feds were looking for them. But they developed a scheme to pump and dump stocks by leaving a message on people's a regular person's answer machine that would say, like as if it were the wrong number, "Hey Kathy, you remember that stock I told you about? Blah 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 blah. Well, don't tell anybody, but blah blah." They made up this great little paragraph, left it on people's answer machines, and they drove stocks through the roof. All right, that had no business ticking up at all. So, they got into a lot of trouble with that. But talking about the analogy here, as this thing rallied up, these things usually end badly if they make moves like this. But as these things start coming apart at the seams, they relaxed a lot of margin requirements in China and really got some folks in trouble, some Chinese citizens that were, lost family farms, things like that. But, as all this is going on, the U.S. stock market has stayed relatively stable. All right. So, the Shanghai right now obviously got stopped out. That 3312 was a big number, as you can see. But we've got even a bigger number at 2966. Let's just call it 3,000. I hear the Larry music here. We got to take a break. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I'm John Logan, filling in for Larry today. And I think we have another honor. I think Basil Chapman has called into the show. Is that true? Is he here? Is he on with us? Okay, he hasn't called in yet. I'm wrong again. That's statistically usually what's going on here with me. I'm wrong, but I'm doing the show for Larry today. Tom and Tommy threatened me with my wife to do the show, and I have to, because they send Guido over every time I don't do what they tell me to do. Just want to state that publicly for the record. Actually, it's a joy doing this show. It's awesome. I'm just joking. And Larry is just a joy to listen to, so I hope you guys are going to find some value of what I'm saying today. I think Basil has called in now. Basil, are you there?
Hi, John. How are you?
Doing all right. How are you doing?
I'm well, thank you. I have a couple of questions, if you've got a moment.
Sure.
One of the questions that I had is, do you think that the external events that are occurring right now, knocking the market down so sharply overnight? I mean, this is the sharpest gap downs we've had in a long, long time.
Yeah, really.
When you've got the dollar rallying, you've got gold. To my mind, gold should be way, way higher. It could still do that, but it hasn't done it yet.
Correct.
And bonds should probably be a lot higher.
Yes.
So, and I think I heard you say earlier on that, yes, we're only 7% off the high. And the action that we're looking at right now is a little bit reminiscent of August of 2015, coming off the high and then rebounding strongly.
Right.
So do you see any similarity to that, where the VIX could become overextended very quickly and you get another market rally, but each time we make lower lows and lower highs, but it's still knocks out the stops? What do you think?
That's a great question, and it's an honor for you to call into this show. Really, thanks.
Thank you.
I mean, I listen to your show it's always going in the background, and I just pick up new things all the time that I can benefit from the trading side. So first,
it works both ways because I learn from you all the time as well.
Great, that's just awesome to hear that. First thing I want to say is, Basil, as you know implicitly, we've kind of been able to buy the dip on the index for years, literally. That's right. The first thing that's in my mind is, it's the trend is to some degree still, for the most part, still in force. We haven't had any big, massive technical breakdowns for the most part. And if they have, they've been just hints of breakdowns that have kind of reversed quickly. So, and I think we've got another caller, but I'm going to pipe Charlie in just a second. If Charlie can hold on, we can all have a three-way going here. And as you stated, I mean, it's seemingly gold should have already kind of gone bonkers if there was real big fear in the marketplace, as well as the notes and bonds. Crude oil's gone down significantly. I don't have to tell anybody that. And these are all things that should have, in my opinion, freaked the market out even in a worse state. And we're like 7% off the highs. I'm again, Basil, I'm looking at this pretty big level for me right now, long-term 1953, just to get back above there and start nibbling on the long side. I mean, I don't see, I don't see this as I've gotten real bearish before in the last couple of years, like, okay, it's going to happen now. It's going to happen now. And really, it's been a lot worse news than this, fundamentally speaking. And this, China slowing down, the Chinese stock market kind of changing its tone. The S&Ps have kind of already weathered that type of storm. And I'm looking at this, it's just right now, a decent situation to try to get a trading bounce bare minimum. So that's
all right, because this is before you had the Fed, you had the wind behind you, you had the Fed. Probably now you haven't got quite that same, the wind's velocity has changed. So there are changes going on. So I just thought it was very interesting because I know these are things you look at, the relationship of the fear factor to the actual price itself.
Well, I don't know if that's exactly going to be the tone moving forward. I mean, the Fed's going to, I mean, you know how they are. I mean, they're completely slanted towards the dovish side. And in my opinion, Basil, they're going to look at this situation and go, wow, we don't know what's going to happen. Therefore, we're not going to edge rates up anymore. I don't necessarily think they're going to lower them, but I think this is a stall at worst, and as far as them, kind of staying on a ratcheting up situation. And I think the market will probably enjoy that. I mean, it'll kind of temper, and I don't think they should be so concerned with market action. As you know, I mean, this is not their job to keep the stock market up. But,
well, that's what we say. But in fact, they made it a statement 5 years ago to say we want equity prices higher. That's what they said.
Yeah. Yeah. Well, yeah, you're right.
It was a question I'd like to pose to you, and well, thank you.
Okay, Basil, thanks for calling in, and we can get Charlie on right now. I'm assuming.
Okay. Well, I'm going to wrap it up, and I appreciate the answer. Thank you. I'll be listening to your show.
Well, no, I hope you can. If you want to stay on,
all right, I'll stay if you want. Sure.
Yeah, no, I wasn't trying to get you off. I was just saying I wanted to pipe. If you were finished, I was going to see if we can get Charlie in here and maybe.
All right, let's get what Charlie said.
Great, Charlie, are you there?
I am here, John.
Great.
Thank you both.
You're welcome.
Okay, I missed a part of the beginning of the.
Hello.
Hi.
I think he dropped.
Oh,
so that's
my fault. Sorry.
That's a shame. I don't think it was your fault. Well, Basil, it's in my opinion. I mean, the rhetoric's going to change as far as the Fed goes. I think the market's probably going to go ahead and assume that, and that will be relatively supportive. But I hear what you're saying. I mean, they've obviously put a stake in the ground as far as there's not a lot of tools in their belt to lower rates anymore, but they've basically said, you know what, we're on a process to raise rates, and we may have to stop it every once in a while for situations like this. But the market has really just had so many good double-edged swords going on in their favor. Low rates, relatively tempered global environment. There's quite a low crude oil prices also. I mean, think about it this way too. I mean, the Exxon Mobils of the world what is that? The second or third most populous stock in the S&P. Isn't that correct? I haven't looked lately. I mean, a lot of these oil stocks can and should and have been driving the market down as a part of this S&P going down. So, I mean, this S&P has weathered a storm pretty well here. I've got some feedback, Al, on your end. But tell you what, we're going to break, and we're hopefully going to fix all our audio problems. And thanks, Basil, for calling in. It's a very interesting slant to go down. And we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We had a real honor. Larry called in earlier and on my show, and then Basil Chapman called in a while ago, and we just kind of posed some things to think about there, fundamentally speaking, for the most part. But interesting to be able to put that in perspective and kind of look around the globe at some usual suspects that usually affect the global markets and the indications from those particular instruments. And it's not a big freak out factor yet, I will say that, which is interesting for the S&Ps. Do we still have Charlie on the phone with us?
Third time, John. I'm in.
Good to have you back. Sorry about the problems here, if we had any.
Persistence pays off, right?
Third time the charm.
Anyway, yeah, and I like your mask from Halloween. It's doing you well.
Hey, there's Larry's underneath all this, so that's why we're excited right now.
Fantastic. Okay, listen, I'm in SQQQ, and it's popped up again today. I'm just trying to figure out where it's likely to be going.
Okay.
Short term.
Okay, and just kind of give me the background on this one because I don't trade it. This is the.
Oh, okay.
This is the ultra short
Qs.
Of the Qs. Okay. Well, I mean, what were we at? 21.95 pre-market, 21.90. So, I mean, you got a massive lid here on this thing around 22.67. We're pretty much right there. I would really start looking if you're long this thing. Is that what you're saying?
Yeah, I'm long this.
Yeah, you got a big time lid up here at 22.67, and it looks like we kind of reached that when this morning already. Oh my God, what did we reach a high of here? 22.56. Okay, so I'm going to pull up my 240, and I'm going to show you here this print 22.56 in the SQQQ. If you see that, we've on our indicators on our long term, this unfair low on our weekly is at 22.67. So I'm going to call that satisfied. That's going to be probably more than likely at least a resting point for this. So I think, in my opinion, you could kind of say, you know what, we reached some short-term targets, bare minimum. We might need to gather ourselves and reassess the thing because that's a big inflection point, 22.67, and we got in that neighborhood.
Okay. All right. If you retraces, where do you think it'll go after it retraces?
I tell you what I'm going to do is let me go into our scanner here for a second. All right. So what I'm going to do, let me type in one of my tech guys. We have an others section in here. I don't know if I talked about this enough. Let me take off the S&Ps. If you're watching this, I'm going to type in other, and we put in kind of different things that people want to see, different ETFs, things like that. So what I'm going to do is right now, and this will just populate within the scanner. I'm typing something to one of my tech guys. I'm going to tell them to put in SQQ into scanner as another instrument. And I'll tell you what's going to happen. When he puts that in, it's going to give you a chance to kind of look at it in our kind of array format that we have here. And I'm just going to use Apple, for example. Apple's right across the board. Let's look at American Airlines Group, and you'll see that yellow peel back happening there. You'll see a new profile attempting to appear. What's going to happen, Charlie, is you're going to be able to kind of look at this in a array format, and you're going to be able to know where these kind of pullback support areas are, even without having these charts and these indicators that I'm showing. So right now, I don't know any really. I'd like to see a new daily profile appear, and I'm showing this on the DIN right now. And if we see this new profile appear, we'll have a new base support area to look at with this. Okay.
All right.
Is there any questions about what I confused everyone on right then?
Yeah, well, I couldn't get the large screen on it initially, but...
Okay. Well, what I'm trying to say is we're going to put it into our scanner. Yes, he's asking me yes. So that's going to be in there probably in the next 15 minutes. if you have this scanner, I'm sorry, I was assuming you had it. That was my fault. I'll tell you what, we'll cover this again. I'm not exactly a big fan of trying to buy this up here. I think we've reached some long-term resistance levels, and we'll see some new information on this pretty soon, and then we'll be able to reassess it. But right now, it's almost like a profit-taking area for this, in my opinion, right now.
Yeah, that's kind of what I was thinking. Okay, that's great, John. I appreciate your effort. Keep up the good work.
Thank you, Charlie. Thanks for calling in too.
Sure.
Yeah, great. And that's a welcome and an invitation for anybody listening to the show. Call in anytime. We love to do these instant analysis type situations. I think a lot of people can get some benefit not only from the instrument itself that we're looking at, but also a little bit on the education of why. So that's interesting. Let's take a look at the S&Ps, and we're getting a little bit of a move here, continuing to move up. Here's our 60-minute, and as you can see, we started breaking above here, and this was the green shoots on our scanner we were talking about. And if I get some things I have to type in on, I wasn't planning on doing Larry's show again after Tom and Tommy threatened me again and told me Guido was. Last time Guido came over, my shoulder is still separated after last time he came over, after the last time Tom and Tommy threatened me. I'm just kidding. No, it was a last minute thing to do Larry's show today. So I've got a lot of people that I talked to right after my show from a lot of desks across the globe, and they're starting to chime in right now. So I apologize for that. So as we look at this gap down and rally up, I want to look at the futures again here. I want to look at and there's the volatility index for. Let's go back to the S&Ps here. So let me do this. Let me do this. Let me go back to my dashboard and let me just type in mini here. All right, and that's just going to put it right there on the screen. All right, so what we have here now is we've had a break above the 60 minutes. We've still got massive damage here. All the stocks are open, and Tucker, we are definitely reaching some extension points here that I don't see very often on the short term. Here's the long-term daily. We're in that 70% area, 62, very close to that kind of level we'll be talking about in the educational videos for you guys, those esoteric situations. Again, all breaths are negative right now, but we're starting to show some green shoots here on the index itself. And I'm looking at now, as we kind of closed above on the 60-minute and came back and retested, if you guys are day trading, we've got this 1954, 53, 54 we've got to pay attention to. We're at that right now. If you guys have gotten long here this morning, got a little bit of a resistance area. I hear the music. We'll be right back. Stay tuned.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, guys. Welcome back to the show. JB's got a great idea. I didn't even think about this. Tell you what, JB, I'm going to take those 4 symbols right now and just copy and paste them over to my tech guys, along with that SQQQ, about basically saying that, well, you guys can read it, that a lot of folks are trading accounts that don't necessarily have futures capabilities on it, and I totally get that. God daggone it. You know, why does sometimes Microsoft blows up on you and you can't copy and paste, and I'm typing them in right now. SPXS, SPXL, TQQQ. Done. They will be in there. Here's crude oil. All right. Now, obviously the market this morning, right now, as we speak, for guys who are just watching tick by tick, crude oil is getting a little bit of a bounce here. All right. And here's our 60-minute with crude oil. And again, I normally don't look at 60-minute charts, but remember, in times of volatility, you kind of almost have to ratchet down a little bit some of your time frames. Crude oil is reaching a 60-minute resistance level, 33.67. Again, this is super short term. Any breaks above there, we're going to have our first green shoots on crude oil that we may be changing tone slightly, just like the S&Ps. Now, as you'll notice, if you have the scanner, this is not to the tick. We take snapshots about every 60 seconds, worst case every 120 seconds. S&Ps, this is our S&Ps, have moved north of 1953. And we kind of broke stride here, showed those green shoots. I'm not a big fan at all of shorting this market right now. This is a gap down in a down market, and in my opinion, time to look at this from the index side as a little bit of as an opportunity here. We had this big resistance area at 1953.54, and we talked about that. So as we kind of have these moves up, you've got to pay attention to that. If we start getting some closes above that 53.54 area, I'm going to look at that as a successful support base area. So that's the way I'm looking at the S&Ps. And like Basil had, there's so many things to think about right now. How do you look at, global slowdown versus Fed speak versus gold versus notes versus currency? I mean, there's so many things in play right now, and I think nobody knows what to do. But you look at the broad U.S. stock market, and it's on a grand scale, the thing is hanging in there. I'm going to pull up a long-term chart here. And by the way, another note. I don't talk about this often enough. When we go into the breadth calculations, and we're still very, very breadth negative here, and I want to, that's that 1954, 53 area is going to be a big number. If you've been long, you got to kind of take a break here a little bit, and you caught a little bit of a bounce this morning because we don't have a lot of indications yet that we're just going to continue to climb higher. 1954 is a resting point, that general neighborhood, and you want to see this thing have some changes in tone here. Again, we're pretty overextended here on our 60-minute, which is something Tucker had pointed out. So that's an indication in itself. But again, I'd like to start seeing some new profiles attempt to appear down here. That 1954 is a big number, and we don't see that happening yet. So again, I think it's still a wait and see. If you caught a bounce this morning, 1954 was your target initially. What I want to also say is, going back to our breadth charts, these are based on closes, this so-called price chart below. Remember, we cannot disseminate real-time pricing or even delayed pricing in a manner that the exchange deems as outputting exchange prices. So these are based on closes of our calculation, and they're not going to show, like this 60-minute, for instance, is only going to show 60-minute closes down below on the price chart. So if you've got the scanner, just kind of bear that in mind. It's not, not acting in a manner that's not conducive to just showing you the price. It's just 60-minute close, things like that. So and that's the case for the breadth chart. The calculations here are real time, or 60-second snapshot. Excuse me. God, did I confuse people or what? All righty. All right, let's take a look at our ETFs for a second. Let's go into our 60-minute. Everything across the board obviously is still down on the breadth calculations here. The XLU, the utilities is hanging in there the best. We talked about that might not be the sector today to buy for the maximum turnaround snapback type feature that you're looking for if you're day trading. But again, something to pay attention to. S&Ps are kind of congregating around this 1954 big area, and I want to show you on the scanner, going into our futures section again, looking at the S&Ps. We're right above that 1954 area on the level of the market. All right, that's what that's kind of basically telling you. And if we consolidate up there, you want to see, if you're short, you want to see these things get away from these inflection points. If you consolidate around them, that's technically speaking, to some degree, even on a short-term basis, a continuation pattern. Let's see, what do we got? What do we got in the future, in the den here? I don't do this show when the market's open for you guys, so there's so many things going on. I'm a little scattered here. Let's scale down. Okay, so one of the things I wanted to, somebody in the den, I can't remember who it was, we wanted to look at SWN. This is one that, an oil stock that had kind of started showing some hints of strength here. So we got a big number around 650 on this. So we broke out, we came back. Crude oil might show a little bit of a relaxing, we've done enough here on the downside temporarily. You might get a little bit of a pop out of SWN here. We always talk about close above and then come back and retest. So I want to show you this on this little oil stock that's just gotten completely decimated from 50 down to 5. All right, we've closed above. I'm going to show you this, and we've come back and retested. So you got a little bit of an opportunity here, in my opinion. Might get some points out of this thing with a very, very low risk reward. And I think we were completely honored by Tom O'Brien calling in. Tom, are you there?
John Logan, what's going on?
Man, it's crazy today, huh?
It's a beautiful thing. Well, I tell you, first off, thanks so much for doing the Larry show. That's awesome.
Yeah.
Man. Yeah. When you were doing when you kicked us off at 8 o'clock, those bonds, which you said, if you've been listening, folks, okay, he was bringing up the aspect that those bonds weren't moving, man.
Right.
And bottom line, that is, I was looking at that. Of course, all of us were up probably half the night, which was a beautiful thing.
Yes, of course.
And those bonds were basically saying, hey, this thing wants to bounce. It was also going into that October 2nd high volume day.
Yep.
So I think we got a good bounce going here, man. It's deviant, isn't it, man?
Yeah. that made me feel good about stepping in. I was like, you know what? In normal situations, you've seen it many times. You're kind of in a downtrend, then you get that big gap down, and it's like, if we'd had opened unchanged today, Tom, you know what it would have happened? It would have found more sellers more than likely. But when we do these gap downs, it's the specialist. Can you stay on for the last segment?
Oh yeah.
Okay. Yeah, because I want to talk about the specialist and how they run their book and how they deal with gap downs like this and what their MO is, and it really fits in with what you're talking about. Guys, we'll be right back.
Absolutely, man.
Yeah.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Tom, we got to move my show somehow when the market's open. I love this.
Isn't it a trip?
Yeah. Hey, listen.
But see, we want you to be before the market so that we can get all the scoop before the market. Because I'm telling you, this morning. So picture this morning. This bond deal, folks. I'm making a big deal of it, but it was a big deal because I'm looking at the market, John. I'm saying to myself, okay, man, hold it. This is going to be a hell of a bounce because. Folks, I like trading the NDX and I like trading the 10-year bonds. I'm saying the bonds. Folks, the 10-year bonds are only up 4 ticks. It's like, what is wrong here, man? So,
it's a clear-cut indication from guys who have seen that movie before, like you. I mean, that is.
Yeah, the money wasn't moving. wasn't moving,
I want to say a couple of things really quick here and get your comments. I mean, we talk about relative strength trading all the time. We talked about Netflix and Walmart this morning. Check this out. You see that one? That's Walmart. It's up 2.5 points from where we were talking about it, like strong stock, gapping down sympathetically. Netflix is what? It's completely on fire. This is one, again, like stay away from it on the short side. It's showing itself. It's giving you another opportunity. This thing's just up 8 points.
How cool is that,
from
man?
The gap down. Yeah. But, talking about what we were talking about before we went off break about the specialist, the specialist accumulates stock. Like, he's got to balance the market in New York. He's not as big of a deal as it used to be, but if the specialist is buying stock on the close and trying to catch that, be the other side of the market as people are selling it, he's going to gap it down in the morning so he can, buy more stock, get his average price right, and find buyers. Yeah. So it's the same principle in the broad index. Markets are going down, gapping down, and then they do the big gap down. It's better for buyers if it gaps down rather than open unchanged, because gapping down, it will find buyers a lot of times. So that's kind of what to some degree has been happening this morning. And I love the way this thing's consolidating around 1954.
So what's really that's it. Okay. Okay, man. Well, listen. Thank you so much, man. Look forward to talking a little bit later.
Okay. Thanks, Tom.
Sad, I know. It's over.
Sounds like a tiki bar. You got a tiki bar? You're in Jamaica, not Clearwater, right? All right.
Yeah.
Are we?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.